Hello everyone, in today's video I'm going to cover the recently stock split of Tesla, and we'll also cover about the Apple, which had announced it earlier. Tesla announced it recently, today or tomorrow, today I think, today in the morning, and the stock split generally favors and increases the prices of the stock because its volatility increases, and the previous many investors who were not able to own the stocks, lot of 100 or smaller, they could now own it. So let's go, look at what that stock split means and when it's effective. That's the two most important things people are looking for. The Tesla currently actually at much higher than 1500. I think it's 1580 for now. For simplicity, let's think about it. That's $1,500 a stock, and it actually fluctuates and could go down to 1500 in a day or two, or could actually keep climbing up. So 1:5 means if you had like 100 Tesla stocks, then August 31st, when you get up in the morning, you will see that you have 500 stocks, and the price will be roughly one fifth of this. That's what two things you will see. The price will become $300. The total value stays same, but you get 5 times the number of stock. August 28th is Friday, and that there is no stock split, but you can think of that through the weekend pro split, and in the Monday morning when you get up, you see the your number of stock. If you own it, it gets 5 times. So now for the new investor, that's for the investors who already own it, but for the new investors, now you can own one stock of Tesla for $300, which means the problem with earlier thing was that if you had to own 100 stock, you need to give out $150,000, and now you own 100 stock, you need to give out $30,000, a little manageable if you are working by 100 stock. Now in terms of number of stock, I don't think it matters much, because there are many many brokers who allow you to own one single stock, and that means like a Robinhood, you could buy one single stock for 1500, but even 1500 could look a high for some investors. So now you can own one single stock for $300. Now coming back to the similar thing for the Apple stock currently actually much higher than 400, like 450. That also now gets split into 1:4. So one single stock will be $100, or a little more than $100 stock, and the dates will be same. You get up in the morning, on the August 31st, you see that your stock is split. Your stock becomes 4 times. The value is 1/4. The total value stays same. Now you can own one single stock of Apple for $100. The same thing for the Apple. Now here is the key thing, why it's important and why it's favorable for you. Let's say as a small investor, I have like $10,000. I think if you see my video on buying at dip strategy, okay, and this is very important from that perspective. Let's say you own one stock of Tesla for 1550 today, and a week later this goes down like 10% maybe to 1350. There's a very good chance it can happen. Market can crash anytime, and I don't know, you don't know, nobody knows. But if it does, my buy and dip strategy says that you need to buy 2 stocks of Tesla. That means you need to give out $3,000 to own 2 stocks of Tesla. I will not go into the fractional stock, but let's keep it like 1 or 2 stocks you can start. And then it further goes down, like it goes to maybe another 10% down, which means it goes like $1,200. Then you should buy another 3 stocks of this, which requires $4,500. Now this money gets bigger, but if you have, like, but you also have to diversify yourself. You need to own Tesla, you need to own other stocks as well to equally diversify. So if one of the stocks goes down very much, the other stocks probably are not as much volatile. So that's where the smaller amount, you start with 300, you can double down maybe when it goes down, then invest another $600 when it's down by like 10%, and so on and so forth. That's where the stock split is very good for the small investor. But the key thing is not even this, but the key thing how it affects is in the options. And I don't know if you how much you know about the options. You can look at some of my videos, including one on the put sell strategy, where you act as a insurance company trying to make money, like an insurance company selling put. So basically, I will quickly go through what the how it affects. The options can only be traded in lots of 100. The one option means 100 shares. So let me quickly go through what it means, for example, for the Tesla. So the Tesla is the one option that could be traded is for 100 stock, which means it can only come into effect before the split in lot of $150,000. If you have less than $150,000, you cannot play with the Tesla options. So what that means is that, let's say I want to sell a put of $1,400. I'm just simplifying it for your understanding, and I looked at the prices of that put. The August 28 put sell price is $31. What does that mean? That means if you sell a $1,400 put, and if the price goes below 1,400, you are forced to buy put sell. You are forced to buy the 100 stocks of Tesla at $1,400 price. And you also get the $31 per stock premium, which means your effective price is $1,369. So you will have to give out $139,100 for the 100 stocks. Now, put sell is a very good strategy where you own the stock only when it goes down, and if it does not goes down, you put $31, or for 100 shares $3,100 in your pocket. So this is very good strategy. I have spoken about it in my other video. The problem with this whole option strategy is this: number one, you can only play if you have $150,000 in your stock, in your account. Number two, in my strategy, if the stock falls, let's say from right now it's $150,000, it falls below $1,400, in fact $1,350, my strategy says now at that time do a put sell again. So you make at $1,350, you do again put sell for like $1,200, and keep doing that and keep acquiring more share at lower and lower price. At some point of time it will revert back, and hopefully it does not go bankrupt in the process, because then we will go bankrupt in that process as well. So you need $150,000, and for a next put sell you need another $150,000, and then keep buying at lower. It does not work even if by somehow I am able to manage this $150,000. Now with that stock split, it does not get very low, but you can in one go you can have like $30,000. Maybe I should put aside $60,000 for Tesla, for at least one more buy at dip strategy, if not more. So if I will have $100,000 or $150,000, I can put aside $60,000 for Tesla put sell thing. The same thing for the call sell. If you have Tesla stock, and if you want to use a call sell, covered call sell strategy, for example, you could use that smaller lot to not to sell all of them, but at spikes you may get a sudden spike. You may want to use a call sell to further set it a higher price at which you will want to sell, and if it does not sell, you keep the premium. The same thing this happens with the Apple stock, and I had another example. Right now the stock is like $450. So for one option, for example, a put sell, you need $45,000 in the pocket. And then, for example, August 28 put sell, I saw for $425, you have a premium of $4.21. What it means is that if the stock goes below $425, you are assigned those. You must buy those stocks. If the other party wants you to, your effective price will be something like $421. It's $425 minus 4.21. That's your effective price, and which is good. but again you have to fork out like $41,000. If it's split into 4 parts, now you can get more manageable with $100 this thing, and in one lot you are only put sell option allows you to do the same thing for only $10,000. And same thing with the call sell strategy. If you have like stock, you want to do a call sell, you can do it in manageable lots of one at a time, selling my maybe $100 stock one at a time in more go. You don't want to, you are not sure that you want to keep some stock so that you can sell at a later even higher price. So those are the things. The stock split, in my view, affects more in the options trading, and it also brings some more smaller investors who could buy like one share or maybe 100, even 100 lots of share in a smaller price. So that increases the volatility, and that this is how the things are. So just to keep yourself aware, and I hope you get benefited with my lectures, and if you subscribe I will bring my more opinion on whether to buy the Tesla stock or Apple or not. But the quickly Tesla as such, it's looking good, it's a good value, it's diversifying internationally. The only thing I am looking at this Tesla is that the other companies, including Volvo, Toyota, I think another I'm not sure, but I think many other companies, they are also catching up in electrical manufacturing. They have a lot of experience, and they are more quality conscious than the Tesla. So those are my views. I hope you will enjoy. Thanks. Bye.